Leverage versus risk per trade. What's the difference and how to use it in crypto trading, Bitcoin trading, Ethereum and other places? Let's start and let's find out. Friends, my name is Yuri, top of Trading You. I ask you to push like, subscribe because it's the best thank you from your side. Let's start. First, when many of you start your trading, you always ask, what leverage should I use in trading? It's the same question. I hear it many times. Why I hear it? Because friends, once more, take a look. I hear it many times because take a look, 58,000 followers on TradingView. Remember that leverage is not such important as a risk per trade. The biggest mistakes that all beginners do, they focus on a leverage, but they do not focus on amount of money that you lose when price hit your stop loss. I would like explain to you why it's so important to know it about all of that. First, what is leverage? Imagine that you would like to buy one Bitcoin, but at this moment Bitcoin costs 32,000, but on your account you have only 16,000. That means that you don't have enough money to buy one Bitcoin, but you want to buy one Bitcoin, and what you do? Exchange gives you an opportunity to buy it, like to have less amount of money on your account and buy a bigger position. Why they do it? Because they're interesting, because when you do bigger trade size, you pay more commission to them. That's why there are leverage on all exchanges. They're really interesting in that. And how you do it? For example, you have 16,000. You buy 32K, what you need? Yes, you need 2x your money. That means you need double leverage. To open such kind of position. But what does it mean? When you open a position with second leverage, that means that exchange lend money to you, you borrow it, but they does not keep risk. They does not hold risk as you do. Why? Because in that agreement, exchange would say to you, okay, like Peter, my name is Binance, and I would like to lend money to you because like you want to do it, like it's your choice. But let's make a deal. You buy Bitcoin, you use our money, you pay small fee to us, but if price go against you, you lose only your money. That means if price, you use double leverage, 2x leverage. If price drop 1,000, that means you would lose 2,000. If price drop 10,000, you lose 20,000. If on your account you have 16,000, only 16,000, that means, my friends, if price drop 8,000, that means you blow out your account. That's why when you use leverage, it's important to ask yourself what kind of leverage you can use. But why it is not such important as a risk per trade? Because beauty of trading, like risk per trade, how much money you will lose if price hit your stop loss. That's what risk per trade. Because in trading, you can make money even if you don't have 100% win rate. Biggest problem of beginners that you always try to make that every trade that you do hit take profit. But it's a bullshit. I didn't see people that make money with 100% win rate. Because such a kind of people, even if they exist, you will never find them because they would never share their strategies that they use. Because there always would be some amount of stop losses. And it's okay because it's the same like in a business. Imagine that you have a restaurant, you pay for service, for rent, you have a lot of expenses, and like people come to you and buy your food, buy your dishes, and that's your income. And your major goal is that your expenses lower than your income, and you accept it. But in trading, people does not accept losses. I don't know why they do it, because it's like trading, it's same business as any other business. You have income and you have losses. Beauty of trading that you can make money even if you don't have 100% win rate. But even more, if you do like there are stuff that calls risk reward, and I recommend you to use at least 1 to 3 risk reward. About what is risk reward, there would be a lesson below it in description, and also there would be a link, and also you can open our platform and course for beginners, and here you will find what is risk reward and what's risk reward, and there are a whole article about it. What is risk reward? It's, take a look on this example, my friend. Imagine that if you open a trade and you put into risk 100 USD, as we discussed. Risk per trade, it is if price hit your stop loss, you lose 100 USD. Imagine that you have 7 stop losses with minus 100 USD. and your potential profit always would be 1 to 3. That means if price hit your take profit, you make 300 USD. Imagine that only if you have 3 out of 10 trades that hit your take profit, you make 200 USD. That's called risk reward. Why I share it with you? Because if you don't have a proper risk per trade, you cannot have a risk reward. That's the reason, my friend. Because why many of you have problems? Because when you do always different leverage, your stop losses size always different. Open your statistic, and what you would see? You would see that in one case you lost 50 USD, in one case 500 USD. In that cases, risk reward cannot exist. And also, tell me please, do you know what your trade will hit take profit? No, you don't know, because any trade theoretically can hit take profit and stop loss, and your major goal is to focus on proper risk reward. Imagine if you have a risk reward and win rate 50%. Imagine if you make 50% of your trades hit take profit. If your risk per trade 100, with 1 to 4 risk reward, you made 1000 USD after 10 trades. That's a beauty, my friends. That's what you need to use, and there will be a link below on this lesson and this article. I recommend you to read it. Why risk per trade far more important? Let me summarize and let me do a conclusion for you. Risk per trade far important because when price hit your stop loss, you always in every case should have the same losses. Only in that case your mathematical expectancy would work, and only in that case, even if you have 35% win rate, that means like only in that case you will make money even if you have 3 trades profitable out of 10. That's why I highly recommend you to pay attention to it. And here is take a look. It's example for you. If you took how many? 8 wins, 17. If you take 25 trades, with a risk reward 1 to 3 and a risk per trade, how many? Risk per trade 100 USD. And do you see that after in the end you make money even if you have win rate 32%. When you have win rate 45, 50%, you make good amount of money. About how to calculate risk per trade, there would be a separate lesson. Below this video you will find all info that you should get it. Friends, if you enjoy such lessons, I invite you to join our education program where I teach you 2 trading strategies that you can use on crypto when you trade Bitcoin, Ethereum and any other crypto coins. That's why below this video, open the link, book your place, and my team will send you, share with you all the information that you need to make a decision. See you in